Hi, this is Vijay Bambani, and I'm recording this video still from my residence, which explains the very informal and kind of down to earth look in the background. The lockdown continues, and we are all interned at home, but we continue to watch the markets. And guess what? I'm really enjoying the messages, the queries, the comments that my wonderful friends and the subscribers of Equity Master channel have started sending out to me on my social media account, my Twitter account, direct messaging on Facebook, etc. Guys, keep them coming and I will answer your queries to the best of my abilities. And of course, you have requested for many more videos on diverse topics like silver, like the sovereign gold bonds, sovereign debt bonds, and your other bullion holdings. I assure you, I will try and fulfill as many requests as I can. I will continue to record videos Monday to Friday, 5 videos a week, week after week, till I try and attempt to answer as many questions as far as possible. But the one question that I'm constantly facing is a little surprising and it's a little disheartening. It's a question about, should I really be buying some bullion as a store of value? Is it a good time to buy bullion now? My response is, what? You haven't already? Internationally, it is a known fact that the key to investment success, or even trading success for that matter, is asset allocation. You cannot keep all your eggs in one basket. You must diversify your wealth in different portfolios. To that extent, hard assets would mean commodities, not necessarily only gold. So if you're buying copper for delivery, that's a hard asset. If you're buying real estate, that's a hard asset too. You must spread your money across various asset classes. Should you really buy gold? Should you only be equities centric? Should you only have 100% equities, or for that matter, paper assets like bonds or fixed deposits only in your portfolio? Hey, that's a bad idea. Let's talk about the difference between equities and gold. The pricing of any asset is determined by demand and supply. I think everybody will agree with this aspect. Now here in equities, the supply is constant. The paid up capital of a company never changes, or it does only after government approval. In the case of India, the Securities and Exchange Board of India does not ordinarily allow you to tweak around with your paid up capital any more than once in 12 months, which means the supply of paper, the paid up capital of a company, remains constant. Now, all you need to do is stimulate demand. A lot of newspapers, a lot of websites, a lot of social media accounts of a whole lot of social media influencers start talking about, oh, look at how good this stock is and it's going to double, it's going to triple and whatnot, and the stock starts flaring up. But what happens when that stimulated demand backs off? Back down again. Let's talk about fungibility. Fungibility is the value of an asset across geographies, across borders. So I have a lot of newfound friends on the YouTube channel of Equity Master from Australia. What if my Australian friends were to get their Perth Mint coins to India when they're outside seeing? They run out of cash and they want to encash those coins. Is it possible to kind of liquidate these Perth Mint coins in India? Yes, of course. You'll get a good value, almost equal to maybe even slightly higher if there's a premium being commanded on physical bullion here in the jewelry markets. Will my African friends, South African friends, be able to liquidate their Krugerrand? Will my American friends be able to liquidate their American bald eagle coins? Yes, definitely. At the same price, maybe a little here and there, maybe higher for all you know. But try liquidating your Apple, Microsoft, Sun Microsystems, Cisco shares in the Mumbai Stock Exchange when you're here and you need some cash. Can you really do that? I'm afraid you can't. Gold is a fungible investment which is valued all over the world. It's completely divisible. So you split a 1 kilo bar of gold into two equal 500-gram bars. Both of them will get the same value. Unlike a diamond, if you were to split a big rock into two, the price of these two rocks put together will never be able to give you the price that the big rock would have commanded. So it's equally divisible. It does not diminish its value. By all means, do allocate a little bit of your assets in gold as a store of value, because when the fiat currencies, the paper currencies start to lose value, I'm talking about losing value. You ask me why. The answer lies in this word called stimulus. Stimulus is nothing but pump priming the economy by easy money, flooding the markets with money, probably printed unbacked by any other asset. Now, the laws of demand and supply tells you that where there's an excess supply of money, the purchasing power of that money tends to erode. So with the same 100 rupees note which you used to buy 3 bottles of Coke day before yesterday, you will realize tomorrow you will be able to buy only 2 bottles of Coke. Now there are two ways of looking at it. Some people would say Coke has become expensive. I would say the currency has lost purchasing power. It's not the same. It's not the same. And look at around you. Look at the world around you. Is the fear factor increasing? I think it is. 9/11 changed the world internationally. 26/11/2008 changed the Indian mindset. The attacks on these 3 hotels. Are you able to go to a seaside installation and click pictures as easily as you used to? I was taking a journalist friend out to Ferry Wharf. It's a place where during the British colonial era days, small passenger ships used to go from Mumbai to Goa. But today it's a fishing town. So if you want to buy fresh fish, if you want to see luxury yachts of the super rich being docked there for repairs, Ferry Wharf or Baucha Dakka, it's known in the local parlance here, is the place to go. A lot of my foreign friends ask me where Ferry Wharf is because I put up pictures on my Facebook or Twitter account and they want to see it. But guess what? You can go there, you can't click pictures. Because after the Mumbai 26/11 attacks, it's a seaside installation. Cops will come out and confiscate your cameras. We are now living in fear. And what does fear do to the price of gold? It jacks it up. So when there's fear in the market, when there's suspicion about paper assets, when you want your money to be encashed in any part of the world, you need a fungible investment. I think bullion fulfills that investment. I hope I've convinced you that bullion, over a period of time, is a very good hedge against inflation, erosion in fiat currencies, and yes, to that extent, if you're thinking extremely long term, even now is a good time to probably allocate a little bit of your wealth to bullion. But if you're really thinking long term, you've requested for videos on the sovereign gold bonds, on the sovereign debt bonds. You've requested videos about long-term portfolio planning. Believe me, they are in the works. I will bring them to you in the near future. Till then, stay safe, stay indoors, take very good care of your health, your investments and trade. Before I sign off from this video, let me remind you to click like on this video if you're watching it on YouTube. In the comment section, do let me know what you think about this video and what else you would want me to record for you in my next videos. Do not forget to share this video with your family and friends and help me spread the cult of knowledge-based investments and trading. Also, Equity Master has a Telegram channel with the handle Equity Master Official. Do join that channel. I put up a couple of updates every day, Monday to Friday. I would love you to read those updates. Thank you for now. Till we meet again in my next video. Vijay Bambani signing off.
Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.